Hello, I'm Carlton Van Putten, founder and CEO of PayRent. Welcome to the Keys to Success podcast, where we unlock the secrets to smarter investments, smoother tenant management, and bigger profits, one episode at a time. Ready to master your property game? Let's dive in.
Welcome back, everyone. Today, we're diving into real estate crowdfunding.
Ooh.
And we're really going to be focusing this deep dive on how this can apply to those of you who are already landlords.
Right.
Because this is a market that's absolutely exploding.
It is.
Projected to reach almost $800 billion by 2032.
Yeah, and I think a lot of people are really excited about this because it really has democratized access to what was previously, kind of an exclusive club.
It was just for the super rich.
Right.
Now it's for everyone.
Exactly.
So if you're already a landlord, you kind of have a leg up in a way because you already understand how this works.
Right.
But even if you don't, that's okay too.
Absolutely.
Because we're going to break it all down for you.
Yeah.
So basically the idea is you're pooling your money with other investors.
Right.
And you're doing it online through these online platforms.
These platforms are really key because they act as intermediaries.
Right.
Connecting you with potential deals. Exactly.
And vetting those deals to a certain extent as well.
Yeah. So you don't have to go out and
Exactly. You're not pounding the pavement.
find your own deals or anything like that.
Exactly.
And there's two main types of investments you can make.
Right.
You can either do equity.
Yep.
Or you can do debt.
So with equity, you're actually owning a piece of the property.
Yeah. It's like buying stock in a company.
Exactly.
But instead of the company, it's a building.
It's a piece of real estate.
Yeah.
So you benefit from rental income if the property is rented out. And also from the appreciation of the property value over time.
And so that's a lot like being a landlord.
Exactly. It aligns very well with your existing experience as a landlord.
And then on the debt side.
Debt is more like providing a loan to the project.
So it's like you're the bank.
Exactly. Yeah. And you earn interest on that loan, just like a bank would.
Okay, so equity, you're more hands-on, you're more of an owner.
You're more of a partner in the venture. And then debt, you're more
passive.
Yeah. You're just providing the money.
Providing the capital.
And then getting a return on that.
Right.
Okay, so why is this so exciting for landlords specifically?
Well, I think one of the big things is it allows you to expand your portfolio.
Okay.
Potentially in ways that you might not have been able to before.
Right.
So if you've been a landlord for a while, you know how difficult it can be.
Yeah, to get financing and stuff like that.
To get traditional finance.
And you're competing with all these other people.
Right, exactly.
So it's a very competitive market.
It is, and this opens up a whole new avenue.
Yeah, like a whole new world.
A whole new world of possibilities.
And the other great thing is you can diversify.
Oh, absolutely.
Your holdings.
That's one of the biggest advantages. You're not putting all your eggs in one basket.
Right, because if you're just buying properties in your own neighborhood.
Exactly.
And something happens in that neighborhood.
The whole market could take a downturn.
Yeah, then all your properties are going to...
You're exposed to that risk.
Go down.
But with crowdfunding, you can invest in properties.
All over
the country, even internationally.
Yeah.
Different asset classes.
So that's huge.
Different types of real estate.
Yeah, that's a big advantage.
It is.
And then the other thing is, and this is for anyone really, not just landlords, but the barrier to entry is so low.
That's one of the most revolutionary aspects of this.
Yeah.
Because in the past, if you wanted to invest in real estate,
you
needed a lot of capital.
Huge down payment.
You needed a lot of expertise.
You needed connections. You needed to know the right people.
To know all the right stuff.
Now with crowdfunding, you can invest with as little as $500 on some platforms.
Which is amazing.
It is incredibly accessible.
Yeah, because even if you're a landlord and you have some capital, $500 is...
It's a much more manageable amount.
Yeah, you can dip your toe in the water.
Exactly. Without risking a ton of money.
That's the beauty of it.
Okay, so we've talked about the good stuff.
Right.
We've talked about why it's so exciting.
The potential.
But now let's get into the...
Yeah, we need to be realistic.
The downsides?
We do.
What are the risks?
Well, the first thing is real estate is inherently volatile. It always has been. It always will be.
I mean, it's cyclical, right?
It is.
What goes up must come down.
Oh, exactly.
What goes down must come up.
Right.
It's just how it works.
And that's true with real estate crowdfunding as well.
Yeah, so you could invest in a property and the market could tank.
It could.
And then your investment's worth a lot less.
And you could lose money.
Yep.
That's the reality.
So that's a big risk.
It is a risk.
But I mean, there's risk with any investment.
Any investment. That's true.
Stocks, bonds, anything.
Okay, so what are some of the other risks?
Well, another risk is that the rental income might not be as high as you projected.
As you were hoping. Or the property might not appreciate as much as you expected.
Yeah.
Or it could even depreciate.
Yeah.
So there's always that risk.
That's why due diligence is so important.
Absolutely.
Like we were talking about.
You need to really understand
Got to research.
the property, the location, the market, the team behind it.
Yeah. Who are the developers?
The track record of the platform itself.
Yeah, because you're trusting these people with your money.
You are.
You're trusting them to
make wise decisions.
make good decisions.
To be transparent.
And to manage the property well.
Exactly.
Okay, so real estate is inherently volatile.
Right.
There's risks involved.
With any investment.
Any investment.
Right.
What else?
Well, another thing to keep in mind is that there are regulatory considerations.
Okay.
This is a relatively new industry.
Yeah.
And the regulations are still evolving.
So it's kind of like the Wild West out there.
It's a little bit of the Wild West.
Yeah.
So you need to make sure that the platform you're using is complying with all the regulations.
They're following the rules.
Both at the federal level
Mm-hmm.
and at the state level.
Okay. And there are different rules depending on which state you're in.
Exactly.
And which state the property's in.
Right.
So it gets a little
It
complicated.
can be complex.
All right. So we need to be aware of the regulations.
Absolutely.
What else?
And then I think the last thing I would mention
Okay.
in terms of risks and challenges is the due diligence limitations.
Okay. So we've talked about due diligence being important.
Yes, but there are limitations.
Okay.
Especially for individual investors
Okay.
who might not have the same resources
As a big institution?
as a large institution or professional real estate investor.
Right.
You know, you might not have access to all the same data.
Yeah.
You might not have the same expertise in analyzing that data.
So you're kind of relying on the platform
You're relying on the platform to do some of that due diligence for you.
to curate the deals in a way.
Exactly.
To make sure they're good deals.
Right.
Okay. So that's important to keep in mind.
It is.
That you're trusting the platform
to a certain extent.
to do some of the work for you.
You are.
Okay. So now that we've talked about all the risks, let's get back to
dive a little deeper
the fun stuff.
into the types of real estate you can invest in
Yeah.
through crowdfunding.
So as landlords, we all know about residential real estate.
That's our bread and butter, right?
That's our bread and butter.
Single family homes, apartments, condos.
Yeah. We know how that works.
We know the ins and outs.
But with crowdfunding,
Right.
you can also invest in commercial real estate.
Which can be very exciting.
Yeah.
Because it offers a whole different set of opportunities.
So what kind of commercial real estate are we talking about?
Well, we're talking about office buildings,
Go.
retail spaces, shopping malls,
Mm-hmm.
industrial properties, warehouses,
Okay.
even hotels.
Wow. So that's a huge.
It's a wide range of possibilities.
Yeah.
And each of these property types has its own unique characteristics,
Right.
its own risks and rewards.
So office buildings, for example.
Right.
What are some of the pros and cons of investing in an office building?
Well, office buildings can provide stable rental income,
Okay.
especially if you have long-term leases with businesses.
Right.
But the downside is that they can be very sensitive to economic downturns.
Yeah.
If businesses are struggling, they might downsize
Right.
or move out of their office space.
Which would leave the building vacant.
Exactly.
Okay. So it's kind of risky.
It can be risky.
What about retail spaces?
Retail spaces can be great if you have a property
Yeah.
in a prime location
Like a shopping mall.
with high foot traffic.
Right.
But the challenge with retail is that it's constantly evolving.
Yeah.
You know, online shopping has really disrupted the retail industry.
Yeah.
So you need to be very careful about
Mm.
what kind of retail property you're investing in.
The locations.
The location, the tenants,
Yeah.
and the overall trends in the retail industry.
Okay. So retail's a little risky.
It can be.
What about industrial properties?
Industrial properties can be very attractive because they tend to have long-term leases
With businesses.
with businesses that need that space.
Okay.
Warehouses, distribution centers, things like that.
Yeah.
So they can provide stable income.
Okay.
But the downside is that they can be very specialized.
Yeah.
And if that particular industry goes into decline,
Right.
then the value of your property could decline as well.
That makes sense.
So there's always risks and rewards.
With any type of real estate.
With any type of real estate.
But we're not even getting into like the specifics of managing a property.
Right.
Which, as landlords, we all know is a whole other beast.
That's a whole other deep dive. We could do a whole series on that.
Yeah.
But for the purposes of this deep dive, we're really focusing on the investment side.
On the crowdfunding side.
Right.
Okay, so we've talked about residential, we've talked about commercial. Now let's get into the really fun stuff.
Let's talk about platforms.
Yeah, like where do we actually go?
Where do you actually find these deals?
To find these deals and make these investments.
Yeah.
There's a whole world of platforms out there.
There is a whole ecosystem.
And they all have their own little...
Their own personalities, their own niches, their own quirks.
Yeah, so how do we even begin to choose?
That's the challenge, right?
Yeah.
Because there are so many options. Where do you begin?
Yeah, so what should we be looking for as landlords?
Well, I think the first thing you need to consider is whether the platform caters to accredited investors or non-accredited investors.
So what does that even mean?
So an accredited investor is someone who meets certain income and net worth requirements that are set by the SEC.
The Securities and Exchange Commission.
Yes, exactly.
So they're basically saying you have to be rich.
Well, they're saying you have to have
Let's stay in this game.
A certain level of financial sophistication and a certain ability to withstand losses.
Okay, so if you're not an accredited investor,
right,
can you still use these platforms?
You can.
Okay.
There are many platforms that are open to both accredited and non-accredited investors.
So that's good.
It is good.
So you just have to check whether the platform...
You have to check the requirements.
...allows you to invest...
Exactly.
...based on your investor status.
Right.
Okay, so that's one thing.
That's one thing to consider.
What else?
Another thing is whether the platform leans more towards equity investments or debt investments.
So like we were talking about before.
Exactly.
Equity's more hands-on.
More ownership.
Debt is more passive.
More like lending.
Okay. And so some platforms might specialize in one or the other.
Exactly.
So as a landlord, you need to think about what's your risk tolerance?
What are you comfortable with?
What kind of investment are you looking for?
Right.
Are you looking for something more passive?
More hands-off.
Or do you want to be more involved?
Well, more active in the management of the property.
Okay, so that's another thing to think about.
That's another key factor.
Right, what else?
Then you also want to look at what types of real estate the platform specializes in.
Okay.
So some platforms focus solely on commercial real estate.
Okay.
Others focus on residential real estate.
Okay.
And then there are some platforms that offer a mix of both.
So as a landlord, I should probably look for a platform.
You might want to focus on a platform
that specializes in residential.
That aligns with your expertise.
Since I already know that market.
Exactly.
Or I could go the other way.
You could diversify.
And try to
expand into commercial.
Get into commercial real estate.
Right.
Through crowdfunding.
Which could be a great way to
learn about a new market.
Expand your knowledge.
Okay, so that's another thing to think about.
That's another important consideration.
So we've got the investor status.
Right.
Whether it's accredited or non-accredited. We've got the type of investment.
Equity versus debt.
And we've got the type of property.
Residential versus commercial.
Okay.
Those are three of the big ones.
What else should we be looking for?
Well, once you've kind of narrowed down your options based on those factors, then you need to start looking at the specific projects that are available on each platform.
Okay, so let's say I've found a platform that I like.
Right.
I've got my investor status figured out.
Yep.
I know what kind of investment I want.
You know what type of property you're interested in.
I've found some projects that look interesting.
Yeah.
What do I do next?
Well, this is where due diligence becomes really important.
Okay, we've talked about due diligence a little bit.
We have.
But let's get into the specifics.
Let's dive a little deeper.
Okay.
So the first thing you want to look for is transparency.
Transparency from the platform.
Transparency from the platform.
Okay.
Are they providing you with all the information you need?
To make an informed decision.
To evaluate the project.
Okay.
To understand the risks.
So what kind of information are we talking about?
Well, you want to see things like financial projections. You know, what's the projected rental income? What are the operating expenses? What's the potential appreciation of the property?
So it's like a business plan.
It is like a business plan.
For the property.
Exactly.
And a good platform will provide that information up front. They should be transparent about it.
Absolutely.
Okay, so what else?
You also want to look at the details of the property itself.
Okay.
So where is it located?
Location, location, location.
Exactly. Location is always key in real estate.
What's the condition of the property?
Right. Has it been recently renovated?
Are there any major repairs that need to be made?
What are the occupancy rates?
If it's already rented out.
If it's an existing property,
Okay.
you want to know how many units are occupied.
Okay.
What are the lease terms?
Yeah.
What's the average rent?
So basically, I need to know everything I would know.
You need to know as much as you can.
If I was buying this property myself.
Exactly.
Oh.
And a good platform will provide you with all of that information.
They should.
They should make it easy for you to do your due diligence.
Okay, so transparency is huge.
It's paramount.
What else should I be looking for when I'm evaluating these projects?
Well, you also want to look at the team behind the project.
Okay.
So who are the developers?
Mhm.
What's their track record?
Like, have they done this before?
Have they developed similar properties?
Okay.
Have those projects been successful?
Yeah, because I'm basically trusting them
You're trusting them with your money
with my money.
to make good decisions.
Yeah, so I want to know that they're competent
You want to know they have experience.
and they're trustworthy.
Exactly.
Okay, so I'm looking at the financials, I'm looking at the property details, I'm looking at the team.
Right.
What else should I be thinking about?
You also want to look at a platform itself.
So it's not just about the individual projects.
It's not just about the individual deals.
I need to look at the platform as a whole.
You need to evaluate the platform.
Okay.
So how long have they been operating?
Like, are they a new company?
Are they established?
Like-
What's their track record?
Like, have their projects been successful in the past?
Have they delivered on their promises?
Okay.
What are other investors saying about them?
So, like, check reviews and stuff.
Look for online reviews, forums, social media.
Yeah, get a sense of what other people are saying.
Exactly.
So what their experience has been.
Okay, so it's like doing research on any other company
It is very similar.
that you're thinking about doing business with.
You're doing your due diligence.
All right, so I'm looking at the platform, I'm looking at the projects.
Mm-hmm.
Anything else I should be thinking about?
Fees.
Yes, fees.
Those pesky
They
fees.
always get you.
They can really eat into your returns.
So what kind of fees are we talking about?
Well, there are platform fees.
Okay.
So the platform itself might charge a fee.
For using their platform, for listing the projects,
Oh.
for managing the investments.
Okay.
And then there might also be project-specific fees.
Okay, so like legal fees or something?
Legal fees, accounting fees.
Okay.
Property management fees.
So you really need to read the fine print
You need to understand all the fees involved
before you invest.
before you commit any money.
Okay, so transparency is important.
Extremely
When
important.
it comes to fees,
Absolutely.
you want to know exactly what you're paying for.
You want to know where your money is going?
Okay, so we've covered a lot of ground here
We have.
when it comes to choosing a platform
And evaluating projects.
and evaluating projects.
Yes.
So I guess the main takeaway is do your research.
Do your due diligence.
Be skeptical.
Don't be afraid to ask questions.
Ask a lot of questions.
Absolutely.
And don't rush into anything.
Take your time.
Okay, so we've talked about the platforms.
Mhm.
We've talked about the projects.
Right.
But there's one more thing we need to talk about.
Legal stuff?
The legal stuff.
The regulations.
Yeah, nobody likes to talk about that.
I know, but it's important
It is important.
because it can really impact your investment.
So let's dive into that.
Let's do it.
Okay, so we're back and ready to tackle the legal side of things.
All right, let's do it.
Because as much as we love talking about properties and platforms, we can't ignore the rules and regulations.
Right, because at the end of the day,
Yeah,
this is still an investment.
it is.
And there are laws that govern how these investments work.
Exactly. So as landlords, we're already familiar with a
Right.
whole bunch of regulations.
Yeah.
Tenant laws, zoning restrictions, all that fun stuff.
Property taxes.
Yeah. But how does real estate crowdfunding
Right.
fit into all of this?
Well, it's interesting because even though we're dealing with real estate,
Yeah.
when you invest in a crowdfunding project,
Mm-hmm.
you're actually buying a security.
Okay.
So that brings the SEC into the picture.
The Securities and Exchange Commission.
Exactly.
So it's not just about real estate law.
It's not just about property law.
It's also about securities law.
It falls under the umbrella of securities regulations.
Okay, that makes sense.
Yeah.
So what does that mean for me as a landlord?
Well, for starters, it means that the platforms themselves
Okay.
need to be registered with the SEC.
So they can't just operate willy-nilly?
They can't just set up a website and start collecting money.
Yeah.
They have to go through a pretty rigorous process to get registered.
What kind of process are we talking about?
Well, they have to disclose a lot of information
Yeah.
about their operations,
Okay.
their financials,
Mhm.
the risks involved,
Yeah.
even bios of their management team.
So they have to be transparent.
Transparency is key.
Okay.
The SEC wants to make sure that
Yeah.
these platforms are legitimate.
That they're not scams.
Exactly.
Okay, so as a landlord, I need to check
You definitely want to make sure.
that the platform is registered with the SEC.
Absolutely.
Okay, what else?
Well, there are also limits on how much non-accredited investors can invest.
Oh, right. We were talking about accredited versus non-accredited investors before.
Exactly.
So the SEC is putting some limits on how much
They are.
non-accredited investors can put in.
Right.
Why is that?
Well, they want to protect individual investors
Okay.
from overexposure to risk.
So they're not risking their life saving.
Exactly. They don't want people to
Yeah.
bet the farm on one deal.
That makes sense.
So those limits are in place
To protect us.
to protect investors.
Okay, so that's at the federal level.
That's the SEC.
Now, what about state level regulations?
Ah, yes, the state.
Because I know every state has its own
Every state has its own set of laws.
quirks
Yeah.
when it comes to real estate.
And crowdfunding is no exception.
So how do I even keep track of all that?
Well, this is where your due diligence really comes into play.
Okay.
You need to understand the regulations,
Oh.
not only in your own state,
Okay.
but also in the state where the property is located.
Oh, so if I'm in California and I'm investing in a property in Texas.
You need to understand both California and Texas law.
Wow, that's complicated.
It can be, but luckily,
Yeah.
most platforms will provide you with the information you need.
Okay.
They'll tell you what the regulations are
Yeah.
in each state.
Okay. So it's all about being informed.
Being informed and doing your research.
All right. So we've talked about federal regulations, state regulations.
Mm-hmm.
Are there any other legal pitfalls
Let's see.
that landlords should watch out for?
Yeah, I think one of the biggest red flags
Like?
is a lack of transparency.
Okay. We've talked about transparency a lot.
We have, but it's worth repeating.
Yeah.
Because if a platform is being vague
Yeah.
about the legal structure of a deal
Okay.
or the terms of the investment or the fees involved, that's a major red flag.
Like run away.
Run for the hills.
Yeah. Don't invest.
Find a different platform.
Okay.
That's more transparent.
Transparency is key.
Transparency is everything.
What else?
You also want to pay attention to the track record
Okay.
of the developers and the platform itself.
Okay.
Have they had any run-ins with regulators?
Oh, so like, have they gotten in trouble before?
Have they been sued?
Okay.
Have there been any complaints filed against them?
So it's like checking their history?
It's like doing a background check
Yep.
on the people you're doing business with.
Okay, so it's not just about the numbers.
It's not just about the financials.
It's also about the legal stuff.
The legal and regulatory due diligence.
Okay, so this all seems really complicated.
I know, it can be daunting.
Yeah, any advice for landlords who are just getting started?
My advice is to start small.
Okay.
Don't feel like you have to jump into a big investment right away.
Put all your eggs in one basket?
Exactly. Dip your toes in the water.
Okay.
Maybe start with a smaller investment
Yeah.
on a platform that specializes in a property type
Okay.
that you're familiar with. And
Yeah.
as you gain experience,
And confidence? You can gradually expand your investments.
and maybe branch out,
Branch out into different property types,
different markets.
different platforms.
Okay, that
Yeah.
makes sense.
Yeah.
Well, I think we've covered.
I think we've done a pretty thorough job
Yeah.
of demystifying the legal side.
Of real estate crowdfunding.
It's not the most exciting topic,
No, it's not the sexiest part.
but it's essential knowledge
yeah, if you want to make
for any investor,
smart decisions
and especially for landlords.
who are already familiar with
Right.
the real estate world.
They have a leg up.
Yeah, but they still need to be aware.
They still need to understand
All the legal stuff.
the legal and regulatory landscape.
Well, thank you for joining us today
It's been a pleasure.
on this deep dive into real estate crowdfunding.
I hope you learned something.
We hope you've learned a lot.
I know I have.
We've covered a lot of ground,
We have.
from the basics to the legalities.
The platforms, the projects, the regulations, and we hope you feel empowered
Absolutely.
to go out and explore this exciting
It's an exciting world.
investment avenue
It is.
with confidence and clarity.
So go forth and invest wisely.
Happy investing, everyone.
We hope you enjoyed this episode of Keys to Success. I invite you to check out past episodes and follow us on your favorite podcast platform to get notified when new ones are released. And when you're ready to simplify managing your properties, be sure to visit us at www.payrent.com.